back with Budget and You, and let's get into more expert voices in. Mohammad Apabhai, head APAC Trading Strategy. Citi as well joins in. Also Gautam Trivedi from Religare. He's the MD and head Equities. Mohammad, hi, morning. Let me start off with you first, because India has been the second best performing Asian equity market so far this year, and these gains come against the backdrop of the huge expectations from the budget. Do you think the political statement will justify high hopes, or do you think the market is going in extremely muted on expectations?
I'm obviously a little bit removed away from the Indian domestic situation, but certainly speaking from a foreign perspective, it does appear that following the RBI decision to keep rates unchanged yesterday, that the market is going into the budget with a fairly subdued expectation. On the one hand, we do have the currency, which is again above 50. We have oil prices flirting within 5% of the highs within INR terms, and we've got this fiscal deficit that the finance minister needs to do something about. So it'll be very interesting to see exactly what maneuvering they do, especially against the weak political environment that they find themselves in at the moment. I think markets are all ears to see to hear what ideas he's got.
Right, Mohammad, good morning. This is Nikunj Dalmia also joining in. So, Mohammad, from a global perspective, how crucial is the Union Budget 2012 for money managers? Do you think it will not affect global liquidity irrespective of what the finance minister today will indicate and announce?
Yeah, I think it's important in terms of setting the short-term direction. I think what he needs to do is probably set out something which gives foreign investors comfort that they are going to get a grip on some of the issues, especially as relates to the impact on the fiscal budget of potentially higher oil prices. But I think the primary driver is still one of foreign inflows into the Indian equity market. We haven't really seen any slowdown in foreign investor appetite in buying India. In fact, if you look in the last month, India, relative to its size, has seen probably the largest inflows out of all the Asian markets. Putting that into perspective, Korea has only received something like $3 million of inflows in the last month. So I think although we are starting to get towards the higher end of market expectations in the global markets, I think we're looking very much for domestic drivers within the Indian equity market. If the finance minister and the RBI can come out with something which is more supportive of the overall liquidity environment, then there isn't any reason why the market can't rally another 5 to 7% from current levels.
Okay, finance minister, and okay, he is on his way to the parliament. Let me just see if I can spot that briefcase, that customary briefcase. I'm sure finance minister will be showcasing that briefcase, and that briefcase essentially really contains the budget document. Is he speaking to press? I hope so. It'll be nice to hear one remark from him. Where is the briefcase as of now? Oh, Aisha, we missed that briefcase. I was hoping that we'll catch a glimpse of this briefcase which really contains the budget document.
I know he's holding it. I think our cameras just have to pan a little lower.
You want to guess what it contains apart from the budget document? I'm trying to guess that every year, but...
I think just that's of critical importance, isn't it? The man of the moment, and just few hours from now, we will, hear out from him what the budget actually contains this time, and more importantly, how the market is going to absorb it. Gautam, I want to get you in. The point that Mohammad was making at this point in time, that, yesterday a status quo policy, but then why were the markets disappointed?
I think the markets were disappointed by the fact that we haven't really seen the RBI come up with a sort of a timeline as to when the interest rate cuts could actually come through. I think the resignation of the or the firing, should I say, of unfortunately of the railway minister, I think also weighed pretty heavily. Most of the investors we spoke to were pretty surprised and taken aback, given the fact that passenger rate hikes hadn't happened in 10 years, and here was a pragmatic railway minister wanting to change that and wasn't allowed to do it. So I think, and paying the price for it, in fact. So I think that's really what I think shook the markets up yesterday.
Mohammed, the prime driver for this year's market rally, at least in EMs, is liquidity. Indian markets this year have got about $8.5 billion of fresh inflows and about $1 billion only in the month of March. What are your thoughts on liquidity, and do you think liquidity is here to stay because of the central bank policy action?
Yeah, I think that's a really good question. One of the things that set up our very bullish view was the provision of liquidity, especially from the European Central Bank, and that was compounded by individual country liquidity. For example, the Bank of Japan defining an inflation target and increasing its quantitative easing program, and in India, of course, we had the CRR cuts that helped turbocharge the market performance there. Now, our view is that the LTRO2 impact is yet to be felt, and we can't actually detect any signs of it yet in the markets. One of the interesting features is that in January we saw $1.7 billion of program trading inflows into the region. In February we saw $2 billion of program trading inflow into the region. In March year to date, March so far, the first 2 weeks, we've only seen something like $40 million of program trading inflows. So certainly there's been a slowdown in that liquidity inflow. Now, I think the other thing is that when you look at the action of the central banks, it appears that the Fed is now not going to be doing QE3. That seems to be the statement coming out of the Federal Reserve meeting. It's the statement that is coming from a lot of the Fed governors, and it's also what our models are showing us internally as well. The ECB have come to the end of certainly this current LTRO program, and the Greek problems at least seem to have been kicked down the road. So for the time being, Japan is probably the only place where you're going to get some more significant QE. Saying that, in the next 2 weeks, what we are expecting is something like $55 billion of dividends being paid out by companies across the world. So we think that into the end of the quarter and the first few weeks of April, the markets should remain supported. A little bit more concerned after that. What we're telling people now is that we're switching from being outright bullish, buying every single dip, to becoming a lot more discerning about the outlook going forward. It's not to say that we're turning bearish yet. All we're saying is that the easy money has been made. From now on in, we're trading on vapors, really, and the risk reward of the market is going to start getting increasingly unattractive. Unfortunately, the market is not positioned very long and hasn't taken advantage of this move higher, and I think there's going to be one final squeeze up, into which people who are already long should be reducing positions and then eventually shorting into.
Mohammed Appa, Citibank, appreciate your time and certainly hope to see more of you. Really appreciate your insights as well. 60 seconds and then we'll get the first pre-open rates. The pre-open rates today are important. Normally they are random, but on budget day I do expect that the rates would be rather synchronized. As of now, the global cues are not all that supportive. It's the local liquidity which is making all the difference. We did see some unwinding in some of the key financials and material stocks on Thursday, but that to my mind is not harbinger of the market undertone. The market momentum is strong and the prime driver is still liquidity. But budget is always an important event, so you could see a couple of 100-point swing on the Nifty, but the broader assessment on the street, at least this Friday morning, is that budget has a shelf life of only 24 hours, and Monday morning it will be back to basics. First rates are 15 points up for the Nifty. This is probably in line with what the SGX was indicating, and 6 points up for the Sensex. In terms of sectors, power will be the most important sector, followed by cement and then fertilizers, and markets are also of the view that they might hear something on oil government subsidy. So OMCs, that's one group you need to monitor. Power, and especially power machinery companies. And third would be cement. So let's start with, first we're starting with infra. Reliance Infra is at 640 rupees. It's uptick of about 5 rupees. Reliance Industries, flat start for Reliance Industries. ONGC, 285 rupees. And State Bank of India is 2300. So the pre-open rates are in line with Asian markets, and that's quite encouraging. I want to check in on some momentum stocks now. So ADAG stocks, Reliance Capital, Reliance Power, and then Reliance Infra as well. Reliance Infra on is Queen 640. Reliance Capital, the first trades have not come out. And then technology, in the run-up to the budget, stocks like Infosys and TCS, they've been marked outperformers. And the best outperforming stock this year, at least from the auto basket, has been Tata Motors. So let's check in on Tata Motors as well. Tata Motors is one stock which has seen some amount of long built-up as well in last 2 or 3 trading sessions. Asha?
Okay, well, it's trying to find its feet. 5,400 thereabouts is where the market is. 53.63 now. So let's just give the pre-open rates some more time to actually adjust. What's actually losing sheen? Look at ONGC, Axis Bank, HDFC, as well as Maruti, and Infosys and Wipro. So just going by the trends of what the pre-open rates are indicating, perhaps it's going to be a weak start for the entire technology basket. What's holding up, and it's surprising to see high beta back into play. Yesterday we were cribbing about the weakness in DLF, and it's back with full force, up a good 2% on DLF this morning. You've got a Hero MotoCorp, BHEL, Reliance Infrastructure, Sterlite Industries, you have an ICICI Bank, as well as L&T and Kane, which are back in full force. But besides that, you'd have to say the market is going extremely muted, if that is what we are going to see by way of normal trades as well, if they are going to be replicated the way the pre-open rates are going. 53.70 right now. It's extremely tempered and quiet.
Gautam, what is your house view at Religare? Do you think budget is more like a 100-point Nifty affair, maybe a 500-point Sensex affair? It's got a shelf life of only 24 hours, and Monday morning when we come back, it'll be back to basics.
Good question. I think this time around, unlike the last, I'd say several budgets, this budget is, I think, very, very key and very important. For a change, I think the whole financial community, the investor, the FIs, domestic players, of course, are focused on the budget. Their concern, of course, is whether this time around the FM is going to bite the bullet and rein in the fiscal deficit. I think he's got basically, this couldn't be a better time to do it, because for the next 12 months, the only major election in the country is Gujarat, which is going to be either December or January. So he's got a lot of leeway between now and the end of this current fiscal to actually bring in some major steps to bring down the deficit. But if he does not, I think the market will be very disappointed.
So 3 things, if you hear from the finance minister today, that will make you nervous.
Another NREGA-style program, for sure. The second would be a big hike in excise and corporate rates. I think that's something which the market to some extent has factored in, but is obviously concerned depending on sector-wise where the hit is going to be bigger. And I think no efforts to cut down on the subsidy programs. I think that would be, these 3 would be key. And if he fails to show any progress in any of these 3, I think the market will be disappointed.
Okay, Gautam, hold on to that thought. I'm also going to get in Nilesh Shah, MD and CEO at Envision Capital, into this discussion. Nilesh, hi, morning. Firstly, is the rail budget any indication to what lies ahead in the union budget today?
The rail budget has been an extremely positive and a constructive budget. I think it's the beginning of a good exercise on the part of the union government, and I think a lot of measures which were undertaken in the rail budget are extremely progressive and constructive. It takes both a medium to long-term perspective, and I think it's a good indicator of what probably lies in store for the union budget. It looks that the government is basically ready to bite the bullet and take certain tough measures wherever required.
Hi Nilesh, Nikunj also joining in from the Mumbai studio. What do you make of yesterday's policy action? Because markets for sure did not applaud the eco survey or the credit policy.
Yes, I think if you look at a combination of both the RBI event as well as basically the economic survey, if you were to kind of look at a combination of both basically indicate that probably FY 11-12 will probably be the worst year in terms of growth, and both the documents project a 6.9% for growth for this fiscal. However, both the documents are extremely positive about the growth for the next 1 and 2 years, where they expect growth to be north of 7%, which I think is pretty good. And I think that barring any kind of significant global events, we seem to be set for that. The big, of course, challenge from both the documents' perspective is that how does the government respond in terms of the union budget, whether the government goes ahead and undertakes fiscal consolidation and initiates measures which would basically address supply-side constraints. I think these are some of the basically important things to which both the RBI policy as well as the economic survey have highlighted, and one has to really see how the budget is going to address these issues.
It's man of the moment, the Finance Minister Pranab Mukherjee holding on to that customary dark brown briefcase which contains the budget document. Let me now also bring on board Nirmal Jain, Chairman of IIFL. Nirmal, good morning. Thank you for joining us. Nirmal, what do you think will influence Finance Minister's speech today? Economics or politics?
I think both, and politics to a larger extent, but I mean that is what all the speeches have been, and particularly when the Finance Minister represents a coalition government. And which is on a very weak wicket in terms of getting any tough measure passed through. So the speech will definitely be more populist, there's no doubt about it. But you know, one generally hopes that between the lines there'll be some economics also that'll be taken care of.
Gautam, what is your sense? Should the market fear the repercussions of what we saw after the railway budget? And do you think the finance minister today is going to have less of an elbow room and he's going to be more bent or influenced by politics than economics?
I think the results of the UP election in particular, I guess Punjab as well, will weigh on, the Ministry of Finance. But like I said, like I said at the outset, that there isn't a major state election until December this year. I think the next 12 months are pretty much clear of any major political compulsions as far as the Congress is concerned, the UPA is concerned, should I say. And I think, hence, I hope he ends up being bolder and does something significant this time. So
which are some of the key group of stocks, Gautam, you would like to buy, irrespective or independently of the budget outcome?
Tata Motors, I think we were just discussing it a few minutes ago.
You like it after a 50% run-up?
Yes.
What's your price target?
Well, our price target actually is a lot lower than where it is right now, but I think from a trading standpoint, the stock clearly has a lot of legs, a lot of interest in that name specifically. A lot of interest has come back into the DVRs in particular over the past week or so, and you're seeing the differential between the DVR and the local narrow. But clearly not a play on India, and hence I think I would continue to pound the table on the stock.
One large cap stock where you're confident that if you put in 100, after 1 year you'll get 120 back.
Well, that's a pretty reasonable return.
But this is after
120.
I was afraid
after 15% run-up, but
I was afraid you might say 200. We still like the cement space, and the top pick remains Ambuja Cements. I think clearly you see demand growing at about 10% plus, and supply only growing at 4 to 5%. So Ambuja remains our top pick in the cement space.
Okay, Gautam, good chatting with you. Appreciate you taking the time out. Now, let's just want to get you in on this point. Do you think the budget will be a reformist one or a populist one this time?
Well, it would probably be a combination of both. I don't think that the government